Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 5th, the thirsty Thursday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. I hope everyone is having a great day out there. Well, of course, the markets are moving lower out here. We're going to really take a look at those and investigate what that actually means to us. Of course, I would love to hear from you. You can give me a call at 877-927-6648. If you can't call in, though, we've got you covered. Just go ahead and send me an email, steve@tfnn.com. Send it in early, though, because of the way that, the ISPs work. And sometimes I get the emails towards the end of the show, and you might have send it as early as you can and put that radio show question in the subject heading if you would. And inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got all the indices trading in the red. Dow's off 956, S&P 106, NASDAQ 259, Russell 53. Now, the point levels are so huge over the course of the last many days out here, really the last couple of weeks, that we really have to try to keep things in perspective if we can. Well, what's that perspective, Steve-O? Excellent question. So just trying to analyze the markets out here. Let's begin by taking a look at the cash indices. So if we look at from low to high out here inside of the Dow, we're just looking at normal retracement levels. And right now, the Dow has pulled back. It's just slightly below its 0.382 retracement level, 26,177.39. If I just asked you a question, for those of you that simply use Fibonacci numbers, if I were to share with you that something had retraced by 0.382%, would you say that the world was coming to an end? No, of course you wouldn't say that. Now, that doesn't mean that the retracement from low to high can't get back to the 0.618 level, which is 25,605. But right now, all that we have out here, I know the numbers are large, but from a pattern standpoint, from a technical standpoint, which is what you and I are really doing here and taking a look at it, I just want to be able to show you what is going on inside the market. So let's go take a look at the S&P 500. This is not going to be the be-all to end-all, but it does kind of give, or should give, a perspective. Here is the S&P 500. So from the low to the high, we're just slightly below its 0.382 area. That 0.382 is 30.29. We're at 30.21. Not a big deal out there. Those 9 points, especially that couple of seconds in today's action out here. Let's go take a look before that could be made up. Let's go take a look at the NDX 100. Again, same thing from low to high. Now, in the NDX 100, of course, you know which index is the one that is the strongest so far. It is the NDX. Now, take a look at it. From low to high, it right now is just testing the 0.382 retracement level, 86.69. We can do this with virtually every index out here. Let's do it with the New York Stock Exchange, NYA. Let's put this up here, see where we're at. This is right now below its 0.382 retracement level out here. In fact, I want to do something else. We're going to shift, not shift gears, but we're going to shift from here, okay, to a question that came in yesterday. And I went ahead and created a chart for it. And it's a really valid question. The question, I'm now paraphrasing because it was an old email and I don't have it on my phone out here. And it came in from Beth, was the person that it came in from. And what Beth was asking me, she said, Steve, is it true that the markets won't bottom until the 10-year yield bottoms out there? And I have heard this comment while driving around or what have you, listening to the boob tube out there. I've heard this comment. You've heard this comment before, right? So you know what Stevie likes to say, just like we did yesterday, right? The comment that folks were saying, hey, look, if the spot volatility gets to 50, back up the truck and it's not. Folks, that does not identify the bottom tick out there. We proved that yesterday. But let's go take a look at this. This one's an easy one to answer the question. You see, these media shows, these talk shows out there, they get so fixated on something, and then it is, if you tell a lie enough, you begin to believe it. Oh, there's going to give you your first clue out there. So here, just take a look at this chart. This chart on the top panel is the Dow. And the bottom panel is the 10-year rate, right now at 0.904 out here. Now, just simply from the standpoint of just come back to the time period of December 24th, 2018. And if you take a look at what the 10-year was at then versus where it's at now, it never made a higher high. It's just simply been moving lower. Yet if you take a look, you already know the answer to this. If you take a look at what the equity markets did off of that December 26 bottom inside of all the markets out here, they moved higher, right? They moved higher. So I don't know who perpetuates some of this BS, because it's all before Steve shared with you just a simple chart that we could go take a look at out here. And if you and I take this back even further, you're going to see the same type of thing out here. So, Beth, and a really great question. I'm glad that you even brought it up out there. Does the 10-year have to bottom in order for the market to bottom? And I'm going to tell you the answer there is absolutely, positively not. In fact, here's perhaps something that's really important to take a look at, just simply from the most simplest of technical patterns or skills that are out there. I want you to focus on, because this is on a closing basis. So both of these are on closing bases because it's a line chart out there. And I want you to take a look at the top portion of this chart. I want you to take a look at the Dow. And at least right now, tell me what you see coming off of the bottom from last Friday. What do you see? Do you see higher closing highs and higher closing lows? And the answer is yes. We're taking a look at the Dow. And when you see higher closing highs and higher closing lows out there, what does that mean? Is that a bullish trend or a bearish trend? You know the answer to that. It's a bullish trend, and the Dow is one of the indices that is most under pressure here. Now, I'm not saying that can't change or anything, but let's go ahead and blank can. You can fill it in. It begins with an S, okay? Just simply before Steve, BS stuff that gets perpetuated out there in the marketplace, that when you go and you just simply look at it on a simple chart, you just want to pull your hair out. Now, I don't do that anymore. As most of you know, if you've been following me for years, you know I've got that receding forehead. So I kind of cherish my hair more, and I just don't pull it out anymore. Not that I used to pull it out either. Okay, so we're about to go to a breakout here. We're just kind of taking a look at the general markets out there. Let's go take a look at what the intraday type of charts are doing. Right now, we see a potential of a signal here. This is in the Dow futures on a 30-minute basis. It's got a bottom signal. So we'll go see if that actually is in place or not. This is Steve Rhodes with TFNN. Would love to hear from you. You could just give us a call at 877-927-6648 or send me an email, steve@tfnn.com. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we got the Dow off 1,000, S&P down 111 as Peter said in Denver. 1,000 points amongst friends out there. Speaking of friends, let's go out to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today?
Okay, Steve. I'm one of those dummies. A couple hours ago, I went in and bought calls. I bought it on K12, LRN. And it's an online educational from kindergarten on up.
Yes.
And I just wondered what you thought of that.
Okay, sure. Let's go take a look at it. So first, Ron, with regard to market profiles, you're well above the daily. It's trying to take on the weekly profile resistance level. So that's 2106. You're at 2112 as we speak right now. You would ideally like to see price close above the top of the weekly chart come tomorrow. Now, the reason that I say that is if you are watching on Tiger TV, I believe you are.
Yes.
And you take a look at this chart here, specifically for the weekly time frame. The one thing that you can notice since it made its high out here, price has not been able to close above the top of a weekly profile. And so you've got a brand new weekly profile that formed yesterday. So I would say that K12, if it can close above 2106 tomorrow, then it's done something that it hasn't been able to do. Now, you like to see follow through the next session, but I would say this would be signaling to you that you're on the right path. If it doesn't close above that level, then you've got a decision to make. You probably would not have lost much, or maybe you have a few pennies in that. I don't know. But I would be taking a look at that from a market profile standpoint come tomorrow. If it can close above that 2106 level, well, that bodes well because price has regained itself by being above the top of the monthly profile, and that's at 2038. So that's what I see when I just simply do it from a profile standpoint. Now, Ron, let's go take a look at my other tools and patterns out here and see what Learn is doing. LRN is the ticker symbol. Now, you love today's action on the daily basis. And what I mean about that is that price is trading above its breakdown level. Price began breaking down at 2058. That wasn't its high, but there were 9 consecutive closes where each close was below the close 4 bars earlier, setting up that TD9 count. Just turns out that when LRN bottomed, it was with a TD9 count. Bar number 9 also was with the Rhodes Momentum Indicator bottom. So it had a real nice bottom back in the 16 level out there. Ron, but what you like right now today, and you'd love to see price close above 2058. I believe it's trading about 2095 as we speak right now. That's assuming that my charts are updated. I hope they are. Let's go take a look at the weekly time frame. The weekly time frame here, again, just showing the top of that weekly profile, nothing else there to be concerned with. What our charts are saying on a weekly basis, a close above that level would suggest that you're going to move, or price is going to move up to 2740. Doesn't tell me the time, but price would move up to 2740 out there. And on the monthly or longer term chart out here, I don't really have anything other than that this bottom, this is important. So on a longer term basis, this bottom with a TD9 count that came right back to its breakout area of 1604 and has bounced off of that. So the monthly is suggesting that price would be moving up to about the 2374 level before it finds its next area of resistance. Ron, does that help you out, or what other questions?
Yeah, it helps you out a lot. Thank you very, very much. I appreciate that.
Oh, sure.
And I'll watch
problem.
if it stays below that close, I'll just get out tomorrow.
Yeah,
okay.
I think that's the big, I think that would be the best message. That would be the best message. But it's got potential. It definitely has potential out there. There's no doubt about it.
Well, it's I just said psychologically, and it's a nice play on a online education. I think a lot of people return to it all over the world.
Sure, absolutely. So watch that 2106 tomorrow, and best of luck with that trade for you.
Okay, thank you, Steve.
You bet. Thanks so much for calling in. That was Ron in Denver. That ticker symbol again that we were looking at is ticker symbol LRN. So I'd mentioned the short-term charts as we were going into the break. I'd mentioned the Dow. So let's let me go ahead and get the begin to get the chart pulled up here. And it was a 30-minute time frame that we were focused on because one of my tools out there, one of my scanners was saying, hey, you've got the 30-minute time frame for the Dow equity futures contract moving lower, doing with less relative energy. So we can see the lines that are being drawn right now. And the key to this pattern, should it form, we'd see some type of bullish reversal candle. So it doesn't look like we're going to see one of those at 130, although we could. Not too likely, but we could. We've got 7 minutes, 6.5 minutes left for that. But this is just a narrow-bodied candle out here, or at least it is at this stage. Who knows what the next 7 minutes will bring. But at this stage here, if we were to see a bullish reversal candle inside the Dow equity future contract, YM, that would be signaling, that would really be generating a Gartley buy pattern. Now, I can't draw the Gartley pattern in here. You can clearly see the A to B equals CD pattern to the downside, or I hope you can see that. I could put up my other charts, but I don't want to bore you with that. So there's two patterns that are in play out here for the 30-minute time frame for the Dow equity futures contract. If we go take a look at I want you to take a look at the 5-hour time frame chart. So the 5-hour time frame chart at the same time that that pattern is underway, the 5-hour time frame for the Dow equity futures contract is testing important support. And important support is Stevie's red line and is the bottom of its box, and it's in the 26. It's really right about where we're trading right now. I can't see where the bottom of that profile is because it's right behind price, but it's basically right in the level that we're looking at. So keep your eye on the Dow equity futures contract here, especially over the course of the next hour or two, looking for some type of signal. But right now, price has really just come back to support on the 5-hour time frame out there. If we look at the daily time frame, is there any messages out here in the Dow? The biggest and most concerning message, I mentioned this to subscribers this morning. Remember, you and I, we've been looking at the phenomena associated with when Stevie's green or red line changes colors, green to red. When it changes from green to red, it tells us that we're going to see, we should see price and that line catch up to each other. And this is the danger, this is the potential danger of today's session inside the Dow equity futures contract. That's what took place overnight. That's what has taken place this morning. So a test and a rejection of a red line out there is bearish. It says that price wants to move lower. However, in the Dow equity futures contract, forget about the indice out there. If you just focus on the cash indice, If you only focused on the ETFs out there that represent the cash indices out here, I think you're doing yourself an absolute disservice. Not like a little disservice, an absolute disservice in trying to trade the equity markets and the indices out here. You must pay attention to what's going on inside the futures contract at least from a pattern standpoint. We're way away from the lows of yesterday in the equity futures contract. But nonetheless, it is a problem with regard to what we have seen so far today in the Dow. But we have these competing patterns. We still have higher closing lows and higher closing highs coming off of that beautiful TD9 hammer candle from Friday's trading session out there, and that's for the daily time frame for the Dow. What else is it that we can go take a look at? I'll show you something else to take a look at out here. So going along the line, I'll tell you, let me do that. No, here, I'll just put this up real quick, and then I'll come back to the chart for Ruby. Wants to take a look at sugar. Here, if you take a look at the Russell 2000 real quickly, cash indice, TD9 count topping pattern out here. What we don't like about yesterday was a test and rejection of Stevie's green line. But nonetheless, you still have a topping signal. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now we got the Dow off 898, S&P down 100 points out here. And let's go to a question coming in from one of our denners from Ruby inside the Tiger's Den who want to take a look at sugar. So, Ruby, like you and I, we were discussing sugar yesterday. Here's the daily time frame chart. And this is very helpful to us because what we know is that today is going to be bar number 9 of a TD setup 9 count. And this bar number 9 is forming at a TD 9 count breakout level. That's at 1337. Sugar trading at about 1345 as we speak right now. We don't know, Ruby, whether today, if this pattern unfolds. We don't know whether today's low would be the low or tomorrow would be the low, if this is going to identify the bottom. But it's a beautiful thing because you've got a bottoming pattern forming right at a support level out there. Now, that's what the daily time frame chart is showing us. What I'd like to see is on some type of shorter term time frame, get some type of a buy signal. And we don't have that just yet. So here's the 30-minute time frame chart out here for sugar, and I don't have any kind of a signal. I don't have any kind of a pattern out here. I don't have a wave count pattern. I don't have a TD9 count pattern. Probably I could put in an A to B equals CD to the downside, but I would say at this stage here, the proof that sugar will have bottom based upon the 30-minute time frame chart would be price trading above 1365. 1365, and we're at 1345 right now, and that's still a pretty good move. But above 1365, price will have gotten above a breakdown resistance level on its 30-minute time frame. So do we have, with the dailies giving us nice signal, but on a short-term basis, we don't have that. Now, even if I back this off, my oscillator and change line will look a little off here, or squiggly, I suppose. On the 15-minute time frame, it's 1370 would be the number I would need to see, or even at worst case, it needs to close above 13, say about 1346, the top of its 30-minute profile out there. But I don't have the bottoming signal on the shorter term time frame out there. So, Ruby, I hope that helps you out with regard to sugar. It sure looks like it is getting ready to form a bottom using that TD9 count pattern on its daily time frame. Hey, let's go out to Martinez, California, and speak with Brent. Brent, thanks for calling. Thanks for holding. How are you today?
Oh, I'm doing just great, Steve. Thank you much for taking the call. How's everything?
Very good. Thank you for asking. And Wynn Resorts is what we're going to take a look at, trading at about 98.16 right now. Are you looking at doing some bottom fishing here?
Yeah, I'm trying to just get ahead of the game a little bit. I had a couple of questions that hopefully you can answer, or at least give some insight on it.
Okay, fire away.
I'm looking at that. It's the 153.41 high. It was back in January.
Yes.
And then it came down to, I think still in January, made that intermediate low around, I think it was 121, and then, had a counter trend move back up, and then now it's broken that area. I just wasn't, a little hard for me to tell the volume if it had done it with, greater volume or about the same or less. And then also I looked further on the left-hand side of the chart, looked like there's something maybe down around 90. That's the area that I'm kind of targeting. Just wanted to get your thoughts on what you think about that.
Absolutely. So first, yes, you've identified, in essence, the A to B equals CD pattern that is in play right now for Wynn, using that high of 153.41 back in the January 17th time frame. The B point of this actually formed out here a trading day of January 30th, 121.01, makes about a 50% retracement up to about 137.58. That set up the C point. Now what you would be waiting for from Wynn would be some type of bullish reversal candle. So it's close to the 1 to 1.272 level at 96.37. Your first question was the B point, the low of January 30th that had 3.6 million shares passed with volume. Well, the day that it was passed, the volume on that was 4.5 million. So the answer is yes. So it was passed with volume. And so this is potentially setting up a buy the D point of that A to B equals CD pattern. What we'd be looking for here is a bullish reversal candle. If that doesn't form, then we expect price would continue to move lower. The next level would be 85.16. That would be your 1.618 level, and that's taking a look at the daily time frame for Wynn. Yes, it's trading into a weekly swing point, so let's go take a look at it. It's Thursday. Let's go take a look at the volume as it moves into. Now, the swing point here that we are all looking at is got the top of that swing point is 100.39. The bottom is the 90.06 area that Brent is looking at. Now, that swing point, if we can get over here to it, has volume of 12.2 million. You're already at 15 million. So if price closes inside of 100.39 tomorrow, inside of WIN, what we typically anticipate is when you push into a swing point with volume and you close inside that swing point, odds favor that you're going to go test the low of that swing point, in this case here for a market that's moving lower. So yeah, I totally see the 90.06. Ideally, what you'd like to see, Brent, is when to get down there because of the daily A to B equals CD pattern, form that bullish reversal signal, or at least test 90.06 and do it with lighter volume. I don't know what it is on the daily. On the weekly, it's the 12.2 level out there. But that's what I see. And take a look at daily and weekly. I'm going to put on my other charts out here, just see if there's any other signals, any other patterns or anything to look at. On the daily, there isn't with regard to WIN. On the weekly, with regard to WIN, 94.28 has been a level that has held as support. Last time that WIN bottomed, it had that Rhodes momentum indicator signal. It didn't generate a bullish reversal candle, but nonetheless, that still did identify the bottom at the 89 count level. That was a daily time frame. On the weekly time frame out here, I don't have anything more to add to the picture than what we looked at. And on the monthly time frame, Brent, the area would be 86.20. That would be its TD9 count breakout level. So going through that, what questions, what other information can I provide for you?
Those were kind of the numbers that you've reiterated. There were ones that I had, that kind of confirms what I had in mind. And I think patience is in order at the moment and see what happens. And again, I'm going to be looking for, like you said, some kind of bullish reversal or some indication that a bottom's been put in. But that kind of, again, goes over the same numbers that I had in mind. And I just wanted to comment real quick. I did hear you the other day. You kind of threw out something that made me chuckle. It's something that my wife and I use on occasion. You're talking about abnormal, which I know is from Young Frankenstein. I had to laugh a little bit.
Good. Absolutely. Hey, we got to be able to laugh inside. You got to laugh. You got to have
absolutely.
A sense of humor. Hey, so I just wanted to tell you. While you were chatting there, I wanted to go and be able to pull back to that daily date where that 90.06 level was formed. Happens to be December 24th. And the volume there was 2.2 million shares. So as you know, we can't really use that holiday volume back there. So I'm just simply going to go, because we know that the next day was a big market bottom, and that was 3.5 million shares. So I kind of use the 3.5 million shares as your benchmark for that swing point that you're looking at out there. But you're probably going to have to do a little bit of math even then, because it still was light volume. But use the 3.5 million. If it's testing that low with less than that, that may be your signal. All right, Brent?
All right. Thank you very much. Steve, that was very helpful. Just have a great day, and I'll talk to you soon.
Thanks. Will do. Thanks so much for calling. Brent in Martinez, California. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's go to a couple questions that have come in by email. Let's go to those, to these here right off the bat. The first one coming in from David from Long Island. So let me read to you what David writes. Very, very intuitive. It makes all the sense in the world. He says, Steve, I get your bottoming signals, and I'm holding long positions. My concern is that on the indices, it can look like there's a huge A to B equals CD down. Use the ES as an example, with the A point being February 20th, the B point February 28th, the C point March 3rd. All have done an almost exact 50% retracement, and there's volume at the bottom. Why isn't this an A to B equals CD down pattern? So the pattern that David, and great question, David. And first, I can't tell the future. But what I can do is, and I'm very good at doing this, is let's take a look at the existing chart patterns out there and see what it is that we see. What's the information that's being presented to us? And so the A to B equals CD down pattern that David is asking about could in fact look like this. And the only way we'd really know, David, if there's a potential for an A to B equals CD down pattern, kind of like Brent and I did. We went back, we took a look at when. Brent asked the very important question, hey, when that B point was being passed, was it done with volume out here? And like you had pointed out, there's a lot of volume on that trading day of last Friday out there. And to a certain extent, that almost says to us that it may be very difficult to get through there. But if it does, and it can, and maybe over the course of a longer haul for the rest of this year, maybe that's the pattern that's in place out here. That just gives you a one-to-one price projection of 25.92 out there. I'd say if this is really the A to B equals CD pattern, we're looking at more like 24.44 or something even beyond that, just simply because it was only a 50% retracement. However, so that is a possibility. However, what are reasons? And here, by the way, here's the retracement that David was mentioning. So you can see the 50% retracement from the high that he pointed out. That's on February 20th to the low out here on February 28th. And there's your 50% retracement. But one of the things that we took a look at earlier in the first segment out here is at the moment what you have going on is you have a series of higher highs and higher lows on a closing basis. And that's what's really important to me is the closing basis versus the intraday type of stuff. But even on an intraday basis, we're not seeing price take out even the lows. Now, again, and I'm glad that you said, hey, please use the ES or the NQ versus going to the cash indices, because if we go to the cash indices, we're going to be without basically nearly 17 plus hours worth of information out there. And I don't know about you, but I know about me. I'll take the information. If you're going to be a technical trader, that's what I mean when I say, look, folks, you don't have to trade the futures, but for goodness sakes, pay what is the non-professional fee that you can add to your account for the futures out there. And a lot of brokerages will especially if you do some trades, maybe one trade a month or something like that, you will. I mean, it's like I think it's less than $10 a month, or less than $15 a month, right? Non-professional level 2 stuff is $17 a month or something like that. So there's really no reason, if you're a technician, to not have access to it and then to go ahead and follow the patterns out there. And I think if you do that, you will do yourself justice. So how do we know that this is not an A to B equals CD to the downside? We don't. But I'm just taking a look at what the current pattern is that's in place out here. Then we have to go with the other information that we have. What's the other information, Steve-O? What's the other useful information out here? Let's see, where do I go? Where do I go with this? Well, here's one. Here's a place where we can go. I know where to go. A couple of days ago, not yesterday, but the day before, and I pointed this out to subscribers. Oh, I think I even have a chart. Oh, yeah, I think I do. Give me a second here to go to the end and see if I've got this so I can pull up this chart. Is this it? That's not it. That's not it. Is this it? Yeah, this is it. Okay, so here's an interesting thing, Dave. Now, this is the SPYs. So the SPYs 2 days ago, when we had another 1,000-point sell-off. The day I'm looking at, David, is March the 3rd. And this is using really the first technique that I ever learned in technical trading, which came from Tom, which was taking a look at volume at swing points and understanding tests and rejections, or like we took a look at some symbol, if it closes with inside the swing point prices, because it was with volume, price likely to go down and test the low of that. If you take a look at the SPY itself, the volume on the trading day of February 28th was, I don't know what it was. I've got to get my data box out here. Where's the data window? There we go. The volume there was 385 million shares. And on that down day, that big down day that we had on March the 3rd, the volume there was 300 million shares. And it was a test and rejection. The level I'm looking at, David, 297.89. So those lows with high volume, as you have pointed out, have already been tested. And they were rejected. And it was done on lighter volume. And then we saw yesterday's big move to the upside out here. So at this stage of the game, this market could go either way. And yesterday, one of the things that we took a look at, let's go find this, the goal line. Let me show you. We talked about, in essence, where the goal line was. We didn't use the terminology goal line yesterday, but we didn't really need to. But the goal line here for the equity markets are their apogee pivot points. And really, David, not until price closes above it, the ES specifically, but you could use all four. Well, let's just say go with all three. If you take a look at yesterday's big move, right, second biggest day in the market, and if we just got caught up in the numbers and we didn't use any technical patterns out there, we wouldn't really know what the Sam heck we were talking about. And so yesterday's move was nothing more than moving back up and testing resistance. Remember, you and I, we said, you know what? We can't give this market a bullish long signal and maybe the ES moving up to the top of its resistance level based on its daily profile, which is what basically set up a new all-time high or close to that. 31.35, that's the level price must get above. Now, in the NQ, we've seen price take on its perigee pivot point and get over it and fail and so forth, but it's 88.69. That's the level to be watching. Even in the Dow Equity Futures contract, that formed, that turned right away at that 27.105. Folks, this is not a swing point. Basically, for any time frame that I can find, these numbers out here, this is a random point in time. It's not really random. It's not random at all. It just happens to represent when the moon is furthest from Earth during the lunar phase, the current lunar phase. And I can't tell you why it happens, not because I can't, because if I do, you'd probably say I'm wackadoodle. Now, many of you already out there say I'm wackadoodle anyways. I don't even use that word wackadoodle. Where the heck did that come from? But, it's like electricity. You don't have to be an electrician to know that electricity works out there. It works. And so does this the majority of the time. There are some months. Look, we get 24 25 signals, 25 to 26 of these signals each year out here, and they're really worthwhile and helpful to use. So, back to the Dow Equity Future contract. We're looking at that possible bottoming signal out there. I don't have the bullish candle. So without the bullish candle on a 30-minute time frame, price must overcome Stevie's red line, 26,294, give or take out there. Steve Rhodes with TFNN. We come back, we'll go finish this show off by taking a look at the last question that has come in. This one coming in from Scott. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's down 922, S&P's off 100 points. Scott's question is, you want to take a look at 3M. So we take a quick look here at, I thought we were going to, 3M out here. What we can see is that price is trading with inside its daily profile. The bottom there is support 147.51, resistance 156.76. We can see that this has already been retested, the 156.76 level. So, Scott, you know that is the resistance area you're up against. Price below the weekly and the monthly profile, so you don't have any profile support there. If we look at the daily time frame for Stevie's other signals, we're going to see that on a daily basis, price has been moving lower, doing less relative energy out there. That creates that Rhodes momentum indicator bottom. That's the only bottoming pattern that I have, and it confirmed yesterday with the bull sash candle. Now, today, the pullback out here is just retesting Stevie's red line at 149.94. What we don't know is if price can clear resistance, 156.76. So if you were to go long, you must know that you've got resistance up there that is held. And then if price can close above it, your next key resistance area, 161.39. Let's go look at the weekly time frame. Any signals out here? So on the weekly time frame, what you have for 3M, price also moving lower, doing less relative energy, but no bullish reversal candle here. So knowing that the daily has run into resistance out here, knowing that you have this weekly potential Rhodes momentum indicator bottom, all that price needs to do, you won't get the bullish reversal candle, the Japanese bullish reversal candle, but if price at least trades above last week's high, I believe, is 156.72, you would get a key reversal session. That would be your bullish reversal candle. And on the monthly time frame, what do we have out here? We don't have anything to identify get to the monthly, Steve-O. The monthly, I don't have anything to identify a bottom. So, Scott, when it comes to 3M, I would wait for the weekly to give you the confirming signal at this week. So watch tomorrow, see what the price action is there. Folks, thanks so much for being here. Stay tuned. 2 more great hours of programming are up. Our favorite polar bear, David White's up next. Tom O'Brien to take us on home. And I'll be back with you on Fabulous Friday. Take care, folks.